What's up, guys? We are back. So we're gonna finish up the rest of this. So, yeah, let's continue.
Insurance premiums. One factor that contributes to out-of-pocket insurance costs is a policyholder's premium. An insurance premium is the price of an insurance policy. It is usually expressed as the cost of the policy per month. How insurance premiums are calculated. Insurance premiums can vary from person to person. Premiums are calculated by taking a base price for everyone, and then subtracting money from that base price based on your personal information. Money subtracted from the base price is called a discount. Factors that affect your premium. Factors that are used to determine the price of your premium include the type of coverage needed, your age, the area you live in, and any insurance claims you've filed in the past. If you're more likely to file a claim or need more coverage, your premium will likely be higher. Example of differing premiums. Two people may have different premiums for the same amount of coverage. For example, someone in an urban area, who has to navigate through more traffic and is thus more likely to get into an accident, will likely face a higher premium than someone in a more suburban region. Lowering a premium. Different insurance companies can charge very different premiums for the same coverage, so it pays to shop around. Some insurance companies even offer discounts if you're a student, have good credit, buy more than one policy through them, or pay your full premium up front instead of on a payment plan.
Who is more likely to pay higher for insurance premium? Jay is a newly licensed driver in a large city where he will be driving more frequently. Individuals with higher risk of using their insurance often pay higher costs to have their insurance. Since Jay has had his license for less time and will be driving more, he is more of a risk for an insurance company. Kevin is older than James, but they are both healthy. Whose health insurance will likely be higher? Kevin is older and therefore more likely to need health care. He is more likely than James to file a claim with the insurance company. So his premium will be higher. Samantha is a college student who wants to lower her premium. What should she ask her insurance company to do? Student discounts for good grades. Great job. Many insurance companies offer discounts for factors such as good grades and good credit. Samantha can inquire about discounts that will help her lower these premiums. So I gotta take that again.
Insurance premiums. One factor that contributes to out-of-pocket insurance costs is a policyholder's premium. An insurance premium is the price of an insurance policy. It is usually expressed as the cost of the policy per month. How insurance premiums are calculated. Insurance premiums can vary from person to person. Premiums are calculated by taking a base price for everyone, and then subtracting money from that base price based on your personal information. Money subtracted from the base price is called a discount. Factors that affect your premium. Factors that are used to determine the price of your premium include the type of coverage needed, your age, the area you live in, and any insurance claims you've filed in the past. If you're more likely to file a claim or need more coverage, your premium will likely be higher. Example of differing premiums. Two people may have different premiums for the same amount of coverage. For example, someone in an urban area, who has to navigate through more traffic and is thus more likely to get into an accident, will likely face a higher premium than someone in a more suburban region. Lowering a premium. Different insurance companies can charge very different premiums for the same coverage, so it pays to shop around. Some insurance companies even offer discounts if you're a student, have good credit, buy more than one policy through them, or pay your full premium up front instead of on a payment plan.
So do we trust stands up to 16 pineapples? So I did it. So we're gonna talk about deductibles.
Insurance deductibles. An insurance deductible is the amount of money you will have to pay for an insurance claim before the insurance company will pay. Once you pay the deductible, the insurance company will pay up to the policy limit. Insurance deductible example. Let's look at an example. Suppose your car insurance deductible is $500. If you file a claim for $1,200, you'll have to pay the first $500 out of pocket. Then the insurance will kick in to help you cover the remaining $700 according to your policy. Premiums and deductibles. Usually a lower monthly premium, the amount you pay for the insurance policy, corresponds with a higher deductible. This means that the less your insurance costs, the more you will have to pay out of pocket if something happens. Premiums and deductibles, cont. Some people may choose an insurance plan with a higher deductible if it means a lower premium. They'll have to pay more out of pocket if something happens, but if the odds of that are low, they may choose to take the risk if it means a lower premium they'll have to pay every month. When to file. Your deductible can also tell you when it's worth it to file an insurance claim. If your deductible is $2,000, you'll have to pay $2,000 before your insurance company will start to cover costs. If your total bill is $1,500, you may not want to make a claim and ask your insurance company to pay since it's lower than the amount you'd have to pay anyway.
If Jesse's car sustains $1,300 of damage and is deductible is $6,000, how much will we have to pay? Jesse will have to pay his deductible and his insurance company will pay the rest. An insurance policy with a lower monthly premium usually comes with a higher deductible. Usually a lower monthly premium corresponds to a higher deductible. The less your insurance costs, the more you would have to pay out of pocket if something were to happen. Yanni is purchasing flood insurance. The chances of a flood are unlikely in Yanni's area, so she chooses a plan with a high deductible. Why did she do this? Odds of flooding are unlikely, and she will pay a lower premium. Higher deductibles usually means lower monthly premium. If the odds of needing to file a claim are low, Lonnie may choose to pay more if she needs to file a claim in exchange for a lower premium. So guys, I am gonna do a separate video on buying insurance. Or, you know what? I'm just gonna make this a longer video. So buying insurance.
Purchasing insurance. Once you find the coverage that's right for you and understand your costs, it's time to apply for insurance. You'll start by filling out an insurance company's insurance application, which helps them determine whether they should take on the risk to cover you and what your costs should be. There are many ways to buy insurance, such as through a local agent, through a broker, and online. Using an agent. An insurance agent is a salesperson who represents an insurance company, or sometimes multiple. You'll typically set up a call with them to answer some questions, and they'll provide you with quotes, or price estimates, for policies that meet your needs. Once you've selected your policy, they'll help you seal the deal, called binding. Using a broker. An insurance broker is a middleman who represents you instead of an insurance company. They help you assess your risks and liabilities and present you with a variety of quotes to help you find the best coverage and price. They may charge for their services, and once you've selected a policy, you'll still have to work with the insurance company to seal the deal. Shopping online. Comparing rates and buying online is one of the simplest and quickest ways to purchase insurance. The process involves searching for providers online, filling out an application, and, often instantly, receiving approval or denial and a quote for a policy. Shopping online offers the most convenience and control, but it can be more difficult to find support if you need assistance or have questions. Comparing your options. Working with an agent or broker is often a longer process than shopping online, but you'll have support to walk you through the process and answer your questions. No matter which method you choose to get insured, it pays to get quotes from several different insurance companies and ask for discounts. The differences in price can be drastic.
So there's two questions up to 32 pineapples this time. So I'm gonna take the quiz, but after the quiz, I would like to, do some research on different types of insurance. How would you recommend Lima sub for insurance? Lima's shopping for car insurance, and their top priority is to make sure she finds the best deal as quickly as possible. She doesn't expect to have a lot of questions. If convenience is the top priority without the need for support, online shopping is often the best route. Agents and brokers often take more time, but they provide more support. Nelson is a new driver purchasing his first insurance policy. He collected quotes from four insurance companies before selecting his coverage. Why did he do this? He did this as a precaution, but if he's shopping online, he doesn't need multiple quotes. Online prices are similar. Prices are similar. Coverage can vary drastically across providers. No matter how you shop for insurance, prices can vary drastically across providers, so it pays to shop around. There is no automatic discounts applied for collecting multiple quotes. How to buy insurance. So let's click on one.
insurance involves identifying your needs, comparing options from multiple sources, online, brokers, or directly from providers, and enrolling during designated periods. The process differs slightly depending on whether you are buying health insurance or other types like auto or home insurance. Here is a step-by-step guide to buying insurance. 1. Identify your insurance needs. Determine coverage levels. Decide how much protection you need based on your budget and risk tolerance. Gather necessary information. For car insurance, you will need your driver's license, vehicle identification number, VIN, and details on your driving history. For health insurance, you will need your estimated household income, zip code, and ages of family members. 2. Choose how to buy. Direct from provider. You can purchase directly from insurance company websites or by calling them. Insurance agent or broker agents represent one company, while brokers work with multiple companies to find you the best policy. Online marketplaces. Use sites like healthcare.gov or your state's exchange, such as Covered California, to compare plans, check for subsidies, and enroll. Banks or credit unions. Some financial institutions partner with insurance providers to offer policies. 3. Shop and compare quotes. Compare apples to apples. Ensure you are comparing the same coverage limits, deductibles, and exclusions between different companies. Check provider networks. For health insurance, verify that your preferred doctors, hospitals, and prescriptions are included in the plan's network. Calculate total cost. Look beyond the monthly premium. Calculate the total annual cost by factoring in deductibles, co-payments, and the maximum out-of-pocket limit. Ask about discounts. Inquire about bundling policies, e.g., home and auto, or safe driver student discounts. 4. Enroll and purchase. Understand enrollment periods. Health insurance through the marketplace usually has an open enrollment period, November 1st to January 15th in most states. Special enrollment. If you missed open enrollment, you may still be able to get health coverage if you have a qualifying life event, such as job loss, marriage, or having a baby. Finalize and pay. Once you choose a policy, you will need to pay the first premium to activate coverage. 5. Review annually. Reevaluate. Life changes rapidly, so review your policies at least once a year to ensure your coverage is still adequate. For California residents, you can shop for health plans through Covered California, which also helps determine eligibility for Medi-Cal. For 2026 coverage, you can apply from November 1st through January 15th.
So let's go to Covered California. So this is like the health for Covered California. And then this, if it would load. Okay, well, that's loading. So we're gonna go here. So evidently whatever healthcare you are going with, I'm pretty sure they have prices. So I'm on Anthem. Of course, I could call them. So what type of coverage or benefits are you looking for? Medical with optional dental and vision plans. Medical only. Dental with